Welcome to the Deep Dive. Today we're really zeroing in on the 2024 annual report from Bike24. They're a major online player in the cycling world.
That's right.
And our mission here is to give you the critical understanding of their year, how they performed financially, their strategies, where they're headed, without you needing to read that, well, pretty hefty document yourself. It's about getting the key insights fast.
Exactly, because these reports, they're full of information, tons of it, but wading through it all takes time.
Yeah.
So we're pulling out the important bits from Bike24's 2024, the financials, the strategic moves, sustainability stuff, and, management's view on things.
Yeah.
Especially with the tricky economic climate as a backdrop.
Okay, let's dive into that big picture for 2024 then. Starting with revenues.
Okay.
They landed at EUR 226.3 million, which on the surface is basically flat compared to 2023, 0% gross year over year.
Right, flat.
But, and this is interesting, while the overall number didn't change, their revenue actually picked up quite a bit in the last 3 quarters. It grew consistently then.
That's a really key point. That flat figure, it kind of masks this recovery trend later in the year.
Yeah, it does.
Suggests they, managed to turn things around after maybe a slow start.
Yeah.
We also saw their adjusted EBITDA margin dip, though, down to 2.4%.
Down from 6.0% the year before, right? So quite a drop.
Yeah, a significant drop. But then digging a bit deeper, their free cash flow, that shot up massively.
How much?
EUR 10.5 million, a huge increase, like plus 279%. So even with lower margins, they generated a lot more actual cash.
Wow. Okay, so profitability margin down, but cash generation way up. That feels like a sign of maybe better capital management, underlying strength.
It certainly points towards efficiency improvements, yeah, a really vital sign for their long-term financial health.
Makes sense. What other sort of financial details caught your eye?
Well, active customers were down just a tiny bit, 0.5%, so 916,900.
Okay, practically stable then.
Pretty much. But interestingly, the average spend per order, that went up by 4.8% to 144 euros. And even better in the last quarter, Q4, it hit 152 euros.
Okay, so people are spending more when they do buy.
Exactly. Even though the total number of orders actually fell slightly by 3.6%, just over 1.5 million orders.
Right, so fewer customers placing slightly fewer orders overall, but spending more each time they clicked buy. Looks like that higher average order value really helped offset the drop in order volume.
That's precisely it. Maybe bigger purchases, maybe more premium items, we don't know for sure, but the value is up.
Got it. What about repeat business?
Still very high. Repeat orders made up almost 68%, 67.9% to be exact. But that was down just a little, 1.4 percentage points.
Okay.
And the average number of orders each customer placed also dipped slightly, 1.7 orders per active customer.
So some small shifts in customer behavior there. How about their costs?
Procurement costs, so what they spend buying the goods they sell, that came down as a percentage of sales. They mentioned more stable selling prices helping there.
So less discounting pressure maybe.
Seems like it. And marketing spend was more efficient too, only 1.2% of revenue. Personnel costs, though, were up a bit compared to 2023.
Okay. And cash on hand, debt situation.
Their cash balance dropped to EUR 13.9 million, but that was mainly because they paid back part of a loan.
Right.
And speaking of loans, their main syndicated loan, it's been extended again, now runs until April 2027.
Okay.
And importantly, the report notes adapted financial covenants, which usually means the loan terms, the conditions, have been adjusted.
Giving them more breathing room, perhaps.
Likely, yeah. More flexibility, something lenders and investors definitely watch closely. And just finally, on financials, their stock, it's listed on the Frankfurt Stock Exchange, Prime Standard. Market cap at the end of 24 was EUR 48.36 million.
Okay, that's a really solid financial snapshot. Let's pivot to strategy. The report seems to have this big theme. Back on track, focus on profitability.
Yes, that's definitely the headline message.
So what were the key things they actually did to get back on track?
Well, it looks like a few things working together. First, they tweaked their pricing strategy, step back from big discounts, and they directly link that to the improved profitability we saw later in the year. Makes sense.
It does. Less discounting equals better margins, usually.
Exactly. They also focused on costs, streamlining things. That included some staff reduction at the second management level.
Okay. Did they quantify the savings from that?
They estimated about EUR 2,000 in savings over the next 12 months from that specific restructuring.
2,000, that seems small for a company this size.
It does seem small on its own, yeah. It probably signals a broader mindset shift towards scrutinizing all costs, not just one big cut. a wider efficiency drive.
Okay, that makes more sense. Part of a bigger picture.
Mm.
So cost measures, pricing discipline. What else on the operational or tech side?
Ooh, a big one was the rollout of their new SAP system, cloud-based S/4HANA.
That sounds like a major project.
It is. And they highlighted how smoothly it went. Apparently, logistics were only paused for like one weekend,
Yeah,
which is pretty impressive for that kind of IT overhaul.
definitely. And the benefit.
Well, it's not just about having new software. It's strategic. It helps efficiency, right? Better inventory management, smoother order processing. And it also lays the groundwork for potentially using more advanced analytics, maybe even AI down the line, to spot market trends faster, which ties right back into that profitability focus.
Right, using tech for efficiency and better market intelligence.
Mer.
Smart. Anything else strategic?
Yeah, they also worked on improving the customer experience on their website.
How so?
Things like adding more filters for searching, better ways to see color and size options, simplifying the checkout, making it easier to buy.
Standard e-commerce improvements, but important ones.
Absolutely. And looking ahead, they mentioned plans to expand into new European markets in 2025, building on the countries they're already in, like Germany, Spain, Austria, and so on.
Okay, so the strategy seems to be tighten the belt on costs, get smarter with pricing and tech, make the website better, and then look at expansion.
That sums it up pretty well. Efficiency, customer focus, tech foundation, and growth.
Now let's zoom out. What did the report say about the market they were operating in, the external environment?
Yeah, it painted a picture of a pretty challenging European bicycle market overall.
Oh, yeah.
E-bike sales were holding up okay, stable, but traditional bike sales actually declined.
Yeah.
And the overall e-commerce market in their sector only saw a slight recovery.
Okay, and broader economic factors.
They definitely called out the impact of the weaker German economy, which is a key market for them. Plus, the ongoing global uncertainties, the war in Ukraine, conflicts in the Middle East, all creating headwinds.
For sure, a tough environment. Did they mention how they tend to fare in downturns? Historically.
They did touch on that. They sort of emphasized their past resilience, suggesting that cycling is a hobby people often stick with, even when money's tight.
Interesting point. People cutting back elsewhere maybe, but keeping their bikes going.
That seems to be the idea. Looking forward, the general EU economic forecast for 2025 is for moderate growth. Rising real wages, stable jobs could help. But consumer confidence is still a bit shaky, though maybe improving slowly.
And e-commerce generally.
Still expected to grow in Europe.
Okay, so a mixed economic picture. What about the bike market specifically? Still challenging.
Yeah, uncertainty remains, especially this issue of overcapacity in the market, too much stock floating around.
Right, which could mean...
Renewed price pressure, more discounting maybe, which could hurt margins again.
But how is Bike24 itself doing now at the start of 2025?
They actually reported a pretty positive start, double-digit revenue growth in the first 2 months.
Oh, that's strong.
Yeah, driven particularly by parts, accessories, and clothing, not necessarily whole bikes. And they reiterated those plans to enter new markets this year.
So it sounds like cautious optimism. They see the market risks, but their own recent performance is good, and they're sticking to their expansion plans.
That seems like a fair assessment, yeah. Acknowledging challenges, but seeing positive signs internally.
Okay. Let's shift gears now to something increasingly important, sustainability and social responsibility. What do they highlight there?
This was actually quite a significant section in the report. They talked a lot about their commitment to using resources responsibly, circular economy principles.
Any concrete examples?
Yes. They specifically mentioned reducing their packaging consumption in 2024. Less cardboard, paper, plastic used.
Good.
And they joined this industry initiative, the Cycling Industry Sustainable Packaging Pledge.
Okay, so committing alongside others. Any other environmental actions?
They're planning to launch a new returns portal in 2025. The idea is that this will help cut down on packaging waste even further.
Interesting. How does a returns portal reduce packaging? Maybe streamlining the process.
Could be streamlining, maybe facilitating reuse of packaging, or just better logistics around returns. The report wasn't super specific on the how, but reducing packaging was the stated goal.
Got it. What about the social side? Employees? Community?
On the employee front, they shared results from a 2024 survey showing high satisfaction. Over 90% said they were happy or quite happy.
That's a high number.
It is. And over 90% also felt they were allowed to make mistakes, which often points to a healthier culture. They mentioned focusing on things like employee participation, benefits, training, work environment, health.
Sounds positive.
Yeah.
A happy workforce often leads to better service, right?
Right, generally, yes. And then beyond their own walls, they talked about supporting local cycling communities, things like a Bike24 summer tour, events in places like Riva del Garda, Leipzig, Innsbruck.
So engaging with their core customers.
Exactly. And also supporting charities in Dresden and Barcelona. Plus, they're working on increasing transparency about the sustainability efforts of the brands they sell.
Looking at their supply chain too.
Mm-hmm. Trying to give customers more information about the products themselves.
Seems like a fairly broad approach to CSR. Any final points on their environmental strategy, CO2 reduction?
Yeah, they mentioned plans to cut CO2 emissions. One way is by expanding the use of pickup points for deliveries.
Right, less driving for the final mile.
Potentially, yeah. And also using logistics software to optimize delivery routes and choose more sustainable transport providers.
Okay.
And they also did an analysis based on the EU taxonomy regulation.
The EU's green classification system. What do they find?
They identified that parts of their business specifically related to personal mobility devices and cycle logistics are considered taxonomy eligible for climate change mitigation.
So aligning parts of their business with the EU's green goals, that could be important for investors.
Definitely. It signals alignment and commitment, which is increasingly valued.
Okay, so clear efforts on reducing their footprint and being transparent. Lastly, let's just touch on risk management and governance. How do they handle that?
They have formal systems in place, a standardized risk management system since 2021, an internal control system that's about ensuring financial reporting is reliable and business processes are effective.
Standard stuff for a listed company, but important.
Very important. And a compliance management system, too, focused on preventing, detecting, and responding to any issues.
And oversight.
The boards. The supervisory board is actively involved in monitoring and advising the management board. The report stated no conflicts of interest came up in 2024 and no changes to who was on either board. And the supervisory board also does regular self-checks on its own effectiveness.
So it sounds like they have the expected structures and processes in place for managing risk and ensuring good governance, provide some assurance for stakeholders, right?
Exactly. It shows there are checks and balances and defined processes.
Okay, great. So let's try and bring it all together then. What's the main takeaway from this deep dive into Bike24's 2024?
I think, in short, it shows a company navigating a genuinely tough year by really focusing. They strategically targeted profitability and efficiency.
Right, that back on track thing.
Yeah, they made key tech upgrades like that SAP system. They managed to hold onto their customer base pretty well despite market headwinds, and they kept moving forward on sustainability.
And the outlook.
Cautious but leaning positive based on their start to 2025. Market uncertainties are still very real, especially around pricing, but their own performance recently has been strong.
Fascinating stuff. So for you listening, this really gives a window into how a big online retailer in a niche sector, cycling, is adapting to economic pressure, changing markets. It really underscores how critical it is not just to chase top-line growth, but to manage costs smartly, invest strategically in tech, and increasingly focus on sustainability too.
And it does raise a broader question, doesn't it? Think about how these trends we saw with Bike24, the focus on efficiency, the specific market pressures, the tech investments, how might that mirror what's happening in other specialized online retail sectors?
That's a great point.
What lessons can other businesses, maybe even outside retail, learn from Bike24's approach, balancing that financial discipline with these long-term strategic bets, especially when the economy is turbulent? Definitely something to mull over.
Absolutely. A great thought to end on. Thanks for joining us for this deep dive into the Bike24 2024 annual report.
Thank you.
Until our next exploration.